looking for some answers tonight. When it comes to the price of gas, everything seems to be running on empty. Our gas tanks, our pocketbooks, and especially Washington's ability to do something about the problem. So how did we get into this mess, and how are we going to get out of it? In this special Election Center hour, we are looking for real answers with no bias and no bull. Also with us tonight, Stephen Lieb. He is the research chairman at Lieb Capital Management, which provides investment advice to individuals and institutions. Pat Toomey, a former Republican congressman from Pennsylvania. He's now president and CEO of the Club for Growth, which works for limited government, low taxes, and economic freedom. And also, Chrystia Freeland is the U.S. managing editor of the Financial Times, and she leads editorial development of the paper's U.S. edition and of U.S. News on its website, ft.com. Stephen, let me start with you. As Ali just told us, demand for oil from China and India, huge part of the problem. How did we not anticipate this?
You know, that's a very good question, because we didn't anticipate it because we don't like to admit that change is necessary and change is going to happen. And we assume the world is just going to be like it was. We were the #1 economy and basically the whole shebang for 20, 30, 40, 50 years. And we just were unwilling to admit now China and India combined are actually a bigger economy than the U.S. Their growth is not going to stop anytime soon, and that's exactly why we are in, or one of the major reasons we're in this kind of crisis.
Pat, during the energy crisis in the 70s, you know, Jimmy Carter was out there preaching conservation, and he was mocked for it, frankly. Right. But if we had listened to him, would we be in the mess we're in today?
Yeah, absolutely. I don't think the notion that we can sort of use government to impose constraints on our growth is a good idea. We're the only country in the world that actually has very large untapped resources that we could tap, which would help enormously. But I also think there's another factor here that's a very big part of it, and that is just the debasement of the currency. The decline of the dollar has been enormous. If the dollar had just retained its value against the euro from 2002, then oil would be at $85 a barrel.
I think that's
and gasoline would be at $2.50.
Nuts.
But it's not nuts, Steve. Every commodity in the world, every commodity has gone through the roof because the dollar has lost so much
crazy.
value.
I mean, what does
which
that have
commodity
to do?
is down?
None. But what does that have to do with China? Come on.
Because every commodity, including real, what does China have to do with real estate in America, which went through the roof?
Let me hear from Chrystia.
It's certainly true that a weak dollar means that the purchasing power of the dollar of everything is less.
Certainly.
But it's also the case that the price of commodities in all currencies has been rising.
Sure.
The price of oil in euros has been rising.
Sure.
The price of oil in Canadian dollars has been rising. So that's only part of the issue. The world's getting richer.
To where we're going with all of this, which is, you know, we see no end in sight. Most Americans right now who are really, you know, struggling to pay for gas at the pump. You know, what happens to us when we're looking at $5, $6 a gallon gas? What's our breaking point?
Well, our breaking point, we're getting to the point where we're starting to notice. But we started to notice when oil prices rose about 100% in a 12-month period. We will stop noticing if oil goes down to, let's say, 110. And that's the catastrophe. I mean, the reason we're in this fix is very simply because we have not done anything with regards to alternative energy. It accounts for next to nothing of our energy supply. And that is a sin. I mean, we have really sold short our future generations because sooner or later,
we would be poorer as a society if we were allocating resources to a less efficient source of energy. The reason we put gasoline in our cars,
let Pat make his point.
the reason we put gasoline in our cars and use heating oil to heat our homes is because it is the most economically efficient way to do it.
The bottom line is at 500.
I know. Give us a bit of a reality.
At $500 a barrel, there's oil underneath me right now. If I dig far enough, you know, we have to be reasonable. What is the thing? If we're going to invest a great deal of money in having more energy and more affordable energy, do we do this looking for oil in every last place where there's oil, or do we say invest in something else?
Let me give you one quick thing.
The market can help answer that.
Keep it going.
You know,
ahead,
places, the tar sands, for example, where I know you've been recently,
and we're going to be talking about that later,
where it's cost-effective to be exploiting fuel. $500 a barrel oil, we're not going to be looking for soon. But I think that what is interesting is there is a capitalist response, and we are starting to see. We're starting to see both consumers adapt their behavior. People are buying fewer SUVs. People are driving fewer miles in the United States, and we're seeing
Let me just make a point as far as conservation goes. We conserve here, then oil is otherwise cheaper than it would be, and that allows China to buy more oil and India to buy more oil. We cannot conserve enough. The other point. point. Take $500 oil. We're a dog chasing its tail because you know what? If we get to $500 oil, you know how much it may cost to get that oil out of the ground? $600. Game over.
Long before we get to $500 a barrel, alternatives become more competitive, and we switch.
But you
wind is already competitive in some parts of America because coal, natural gas, oil,
let me tell
every
you the
other
problem.
commodity in the world. Wait, let me finish.
Sorry, I'm sorry.
And human innovation is just wonderful, and it's breathtaking, and it's great that China is modernizing and growing, because the Chinese and Americans, people all around the world, are going to find the alternatives we need as oil becomes more and more expensive.
The only issue is, and this is where government does come in, that some of these alternative sources of energy take years and years to develop, for example, nuclear. And so the structural question the government has to think about is, are there some sorts of guarantees for the building of nuclear power plants you want to have?
Right.
Are there some ways that you want to flatten out the cyclicality of the oil price?
We are coming back to alternative energy a little bit later in the show. We're going to talk about that more specifically. Panel, stay with us.